But the focus now is on the company's acquisition of Rite for $17 billion, a figure that includes debt. We told you about it last night and what it might mean for consumers. Bertha Coombs now with more.
Walgreens says its $17 billion merger with Rite will allow the company to control costs and offer more services to consumers. Analyst Richard Evans says it's more complicated than that.
I don't think the Walgreens deal is about getting better prices for the consumer at all. It's a counterweight to drug benefit designs, which are beginning to restrict which pharmacies people can or cannot go to.
Insurers and large employers have looked to combat rising drug expenses and get ahead of new ACA taxes by limiting pharmacy networks to get better contract discounts from drugstores. Getting bigger will help the pharmacies stay in those networks. Walgreens, already the biggest U.S. chain, would have more than 12,000 stores if the deal's approved. Its next largest rival, CVS, which bought Target's pharmacies, nearly 10,000. One former Trade Commission regulator thinks that much concentration is going to limit consumer choices.
The FTC is really concerned about increasing healthcare costs and basically turning the pharmacy market into a duopoly with one such dominant firm just will mean consumers pay more and receive worse service.
David Balto argues consolidation among the large insurers and pharmacies means consumers will just wind up paying more for healthcare.
The story has been lackluster at best about whether consumers benefit in any fashion from some of these mega mergers. It's hard to come up with any example in which consumers have benefited.
Analysts say consolidation is happening because health companies, the government, employers, and other payers are all trying to find efficiencies to rein in health costs. Until the dust settles, consumers will likely be caught in the middle, facing rising out-of-pocket expenses. Bertha Coombs, Nightly Business Report.